Well, you're watching Reporter's Diary and Earnings Corner in Focus. Tata Motors management speaking on the numbers just delivered. Let's cut across.
Almost the same, around 3,900 crores last year quarter. For the full year, Tata Motors turnover stands at 2,32,000 crores, up from 1,88,000 crores last year. EBITDA margin for the full year was 16.1%, up from 14.1%. Profit after tax was close to about 14,000 crores compared to 9,800 crores last year. At a group consolidated level, the automotive debt to equity ratio stood at 0.07. At the consolidated level, that means very little net debt on the balance sheet. Going into some level of detail, the performance of the India business, Tata Motors, continues to remain very challenging, with volumes and turnover dropping and cost pressures. Net revenue came in at 8,500 crores, down from 11,000 crores in the same quarter last year. EBITDA margin was negative at 6.2%. You would have seen it in the previous quarter also, Q3, which was positive 3.5% same quarter last year. Profit after tax, after taking some tax credits, profit after tax came in for the quarter at 800 crores negative compared to negative of 300 crores the same quarter last year. For the full year, net revenue was 34,000 crores, down from 44,000 crores in the same period last year. EBITDA margin was negative at 1.4%, down from 4.8% in the previous year. And profit after tax, with the full year tax credits available, profit after tax was marginally positive as 335 crores, marginally up from 302 crores in the previous year. At Tata Motors standalone India business, net debt to equity was at 0.77:1, slightly down from the immediately preceding quarter. The Board of Directors today also recommended a dividend to the shareholders, maintained the same dividend as last year at 2 rupees per ordinary share and 2.10 per EA ordinary share, which are the same levels as declared last year. Jagar Land Rover had another quarter and year of great performance, business performance and financial. Net revenue, this is in pounds. Net revenue was 5.3 billion pounds, up from 5 billion pounds same quarter last year. EBITDA margin in this quarter was 17.2%, up from 16.2% in the previous year. Profit after tax came in at 449 million pounds, up from 377 million pounds last year quarter. For the full year, Jaguar Land Rover reports a turnover of 19 billion pounds, up from 15.7 billion pounds last year. EBITDA margin for the full year was 17.5%, up from 14.8%, and profit after tax at 1.9 billion pounds, up from 1.2 billion pounds last year. In Jaguar Land Rover, the net debt to equity was negative, which means the cash in the balance sheet was higher than the total debt. A bit of color on the business side. In India business, we continue to face tough market conditions for the fourth quarter this year and continuing for a prolonged period in this year. We have seen continuous years of deceleration in the economic growth, weak trend in consumer sentiments, high levels of inflation, fuel price increases, all of which, and high interest rates, all of which continue to impact the demand for automotive products in general and commercial vehicles in particular. On the other hand, for all manufacturers, marketing spends, variable marketing expenses at the industry level and for the company continue to remain high. However, in our business, in our M&HCV range, the new launches and a whole host of value-added services helped us to increase our market share in medium and heavy commercial vehicles by 1.6%, 160 basis points in the financial year. In the other segments, small commercial vehicle cargo and small commercial vehicle passengers, our market share continues to remain very strong. We extended, as I said earlier, we launched a number of products in our Tata Primer range and extended a whole host of value-added services. And all these are backed by the Tata Alert, Tata Fleetman Triple Benefit Insurance, 4-year warranty and extended service promises. We also held the T1 Primer Truck Racing event, which was a big success, and we believe it's a very promising property in terms of our brand taking it forward in the future. In passenger vehicle business, we launched the new Nano Twist, Vista VTEC, Revertron, the all-new family of next-generation petrol engines, which will power the Zest and Bolt, to be launched later this year. We will continue to focus on end consumer requirements, end consumer experience, and additions to our product range. For the year, the vehicle volumes in commercial vehicles was at 378,000 vehicles, down from a little over 5 lakhs last year. In passenger vehicle business, the volume for the year was 1,41,000 vehicles, down from 2,24,000 vehicles. Jaguar Land Rover wholesale and retail volumes for the year stood at 4,29,000 vehicles and 4,34,000 respectively, up by about 15.5% and 16% in terms of wholesale and retail sales. The growth in retail sales have been supported by our new products. Land Rover grew by about 12%, primarily powered by the launch and the continued success of Range Rover Sport, the full year of the new Range Rover, and continued strong growth of the Range Rover Evoque. Jaguar is up 37%. Robust demand for XJ and XF models, including the Sport Brake. The company maintains a balanced sales profile with all markets continuing to grow. You see on the right side a pie chart depicting the regional distribution in terms of our global sales, with China accounting for 24% this year compared to 21% last year. North America 15% compared to 16.4% last year. And similarly other geographies, UK at almost 20-21%. We continue to invest heavily in our product development and capital expenditure plans. We ended the year with a spend of about £2.6 billion in new products and capital expenditure and expansion of manufacturing capacity and investment in the engine plant in UK and our investments into the China joint venture. EBITDA was at £3.3 billion, which resulted in a margin of about 17.5%, which is arising from the strong growth in volumes, richer product mix, and richer regional mix. With the profit from operations, after the capital expenditure spend, which I talked about, of $2.6 billion, we maintained a free cash flow positive. Post the investment, free cash flow for the year stood at $150 million before financing costs. In the last quarter, the company also completed certain financial transactions in terms of buyback of its earlier bonds.